Greetings, it's your buddy, your pal, your friend, your teacher, your guide, Anthony Washington. I am the owner, creator, proprietor of Systems Management Cash Flow Institute. And yeah, how long have we been in a bear market? How long will it last? You see a lot of information about the bear market, right? And the fact of the matter is, today, on the 23rd, I wanted to make this video real quick because the market did what it doesn't. I don't really. I don't think I called it on record, but in my mind, just doing my analysis. Well, in my last video, I did talk about how, or a previous video, I talked about how the writings were on the wall for a bear market for quite some time. If you look at, if you know how to read the charts, I'm not gonna. Maybe I'm just too. I probably am too humble at times, but if you know how to read the charts, you see we've been headed for a bear market for quite some time, since late November. Late November was really the top of the market for the heavy hitters. Let's go to the. I talked about this before. The market makers, as you could say, top of the market was in November. That goes for J.P. Morgan, and that's Chase. That goes for Goldman Sachs. And I was taught a long time ago, watch the banks. If you don't watch anything else, watch the banks. Why? Money flows in and out of the banks first. They underwrite the deals. They they have all the data. They move the market. Okay, especially Chase and Goldman Sachs. Goldman Sachs probably more to a larger extent, and it wasn't up until really up until the last 2 weeks that the steam started picking up, talking about the bear market and the recession, and I believe we're still headed that way to a recession. But the markets are always looking ahead. So I did okay. I've done okay. Once I really disciplined myself and caught on, I played Goldman Sachs mostly to the downside with puts, right? Okay, so you can see here, you can play puts. That's why a lot of people preach. And that's right. Really, it is the most prudent practice is to buy leap options. Leap options are longer expiration date um, options, right? Most people, or the majority of traders' introduction into the world of options trading is probably usually going to be short-term options, weekly options, or something like SPY has every other day expiration dates. Um, so a lot of people play those because those are cheap. They a lot of times they might have a lot of volatility surrounding them. They're exciting. It's like playing. It really is. It's just kind of like going to the casino. But most savvy traders, they trade leaps. They trade longer term expiration dates. So if you would have been in a put play from November, since from the end of November, and you had a nice little leap. I don't know. I'm not going to look at the expiration at the options chain, but if you had some leaps expiring maybe out in June and you played it to the downside, you've done all right on that on your return. Me, I'm still quite a novice. I'm kind of hard headed, um, so I like playing weekly options. I like the excitement of it. It works for me in my account. I like the quick. turnover of money. Now I do realize the downside. I do realize the drawbacks to it. And once I get to, I do plan on uh, executing more leap options. But at this point, it just kind of works for me. But anyway, point I'm making is I have been once I finally caught on, probably around like the end of February, I started really playing puts on Goldman Sachs and doing okay. But the market is not, the market goes up and down. So we see from a when you zoom out on a monthly chart, it's clear to see that there's a downtrend. But it's just not straight. It doesn't go straight down. We know that. So from week to week, excuse me, from week to week, day to day, hour to hour, time block to time block, you see different types of movement, opportunities to buy and sell, high, low, low, high, high, low, whatever. The opportunities to sell, buy low and sell high, right? All up and down here. This is all people up and down here are making money, and the ones who are really making the money are the market makers, the ones who are actually creating the market and playing the spread. But anyway, um, so the last few weeks, I've really started to notice that people are catching on to how the market, because at first you would see a lot of people talking about, oh, buy the dip, buy the dip, but when it keeps on dipping, then it's like, okay, let's reevaluate things. Now people are starting to catch on. Okay, the market is going down, and I saw last week people were in panic. They were in terror. That okay, the bear market is here. When if you've been watching the market, you know that Goldman Sachs has been heading in that direction for quite a while, 6 months or so, 6 7 months. So they've already been cleaning up on the downside with the puts, and so and last Friday probably I saw more doom and gloom headlines and posts than ever, right? And so that told me, I was like, well, the market never does what the majority of people think it's gonna do. The ones who are moving the market, they're always a step ahead. They know what's going on. So I knew today, and I'm gonna call it. I believe this week, and maybe even for the next couple of weeks, we could probably see some correction. We could see some bullishness to kind of fake people out. Really, I believe that. I could see that. I could definitely see that. Today was a huge day for Goldman Sachs. Today was a beautiful day for a lot of us who trade Goldman Sachs and Chase, because it made some real good movement early on in the day. And some people probably grabbed them 200, 300% winners, especially from last week if you were holding some some swing calls, right? So what I'm saying is the market is all you have to think with the market makers, and when everybody is calling doom and gloom, the market makers, they're in control, okay, and they're gonna do the opposite. So I know a lot of people. I saw some of the groups that I'm a part of message, "Oh, we're gonna start playing push. We're gonna start." It's not quite that simple unless you're playing leaps, and even then you have to be prudent about your entry and your exit. There is someone told me there's never a bad market. There's just bad entries and exits, right? So a lot of people were probably saw at the end of the day last week Goldman Sachs taking or the last week Goldman Sachs taking a dive, right? And probably, oh, let's get some puts, and then you see here the last hour of the day on Friday, there was some movement upwards, and that continued on the first 2 hours of the day. That's when a lot of the profit was made. And I still see, and then of course it cooled down, volume fizzled out. Um, but then looking at the puts, if you still were trying to play puts here, if you were trying to wait until it got the top, try to play puts here, you still probably those your options is not getting the movement that you like, not making the money that you like. And I still see, never try to predict the market, but I'm seeing probably, let's look at, I keep my chart clean for the most part. I'm not an expert, but I know a little bit, so I gotta be still less humble. Um, volume is picking up on the monthly. Still got 8 days out. Volume has picked up a little bit. Well, actually, no. I'm still bullish. In the short run, I think this week we could probably see some more upward movement to maybe like three. It's gonna play around this 320, maybe 325, maybe even try to shoot up to 330. I could see that, and that's gonna be the opportunity to make some money because it's bounced off that 300, 305. It's bounced off this area a few times, but it's still under the 200 or the moving average. Which moving averages do I have? This is the 21 day. Let's see what the 200 is. Let's see how the 200 looks. Okay, well, that puts things better in better perspective. We're well above the 200-day average. So, again, I'm not. This is not advice. I'm just showing you what my thinking is. What I'm looking at, I always, and plus I pretty much always play Goldman Sachs. I am actually bullish in the short term for the next probably week or two. I'm thinking we're gonna see some good movement, like with the banks, financials, tech stocks. Apple has gotten beat up, but I think it's done over. It's being oversold. I think we're gonna see some movement back up for a while, and then probably through the summer we might see some bullishness throughout the entire summer, which is antithetical or contradictory, I don't know the word, to normal market conditions. Because you see, normally you see from my experience, the last 2 or 3 years that I've been 3 4 years that I've been watching the market, normally you see bullishness in February, March, April, and then you see a slight decline in the summertime, right? At the end of May, at the going June, July, you see kind of choppy markets. I actually see a little bit more bullishness, but then I could be completely wrong. So that's why I play weeklies, and that's why I try to be as prudent and as diligent as I can be. But the question is, how long have we been in a bear market? We've technically probably, if you go to according to the financial sector, which is Goldman Sachs, Chase, Bank of America, we've been in a bull market. I mean, in a bear market for about 6 or 7 months. A few months. I won't say 6, 7, because that was the top and it started going down. That doesn't necessarily constitute a bear market. Um, but we've been going down for a while, and then the public catches up because the tech stocks and a lot of other stocks, the energy stocks, they might lag, and you may see all time highs with them after the fact. The banks have hit their top, and then you may see tech stocks and other industries actually soar to new heights, and then they follow suit like the financials as we've seen. So, how long will the bear market last? I actually think, since I have to be a contrarian, since everybody is preaching doom and gloom, I actually think that we'll see a few pops throughout the rest of this year that creates false hope, euphoria, maybe even for those who are prudent, opportunities, or we may just see a pause in the drop in production and drop in, they're saying gas prices will go to $6. I don't think that's going to happen. Not yet. 2023 and 2024, thinking long term, I think that's when the effects could really take place. But then I could be wrong, man. I don't know. America is pretty resilient. I was not in the markets, but I was paying attention back in 2008. And at least here in Texas, you didn't feel it too bad, the recession, the Great Recession. And then things started to recover pretty fast. And if I would have known what I knew then, I would have, because there were a lot of people, even up until 2000, that lingered up until like 2009, 10, 11, 12, and people were still kind of hesitant to jump in the markets. And those who did jump in the markets then, whether that be real estate, buying distressed businesses, stocks, those who jumped in that time, they're sitting fat right now. I know they are, and I'm thinking that that's the case right now. I think we may have actually already. I think we'll go down some more eventually, but I actually think we won't see too much more of a drop. I think we'll see a lot of sideways movement for a while. And then I actually think the full effects will come along in 2023, and we'll actually start to see a lot of growth. I think the collective consciousness of people is poised and ready for whatever hard times, and actually poised and ready to create opportunities. So that's my assessment. I don't know, but other than that, I really just wanted to say that, get that off my chest. I wanted to make a video for today because I wanted to keep the consistency going. I will do a better job. Anybody who watches me, and right now nobody's watching, so it's okay. Your greatest asset is your anonymity. I do want to get more consistent with more specific topics, really honing down and creating better presentations. But at the very least, I want to crank out what I have to say and get my thoughts documented and on the video. So, peace and blessings. Don't be scared. Study the markets. Manage your risks. Go in cash if you got to. I'm in a lot of cash. Well, I'm not a lot of cash. I'm not gonna sit up here and act like I got a whole bunch of cash. But as far as my ratio of investing in cash, I'm more in cash than ever right now. Because I'm optimistic in the short term about the markets, like I said, but long term, the next year, I think we will see some more down movement. But I really don't think it's gonna be as gloomy as people think. I think we've seen a lot of it already happen, and that's my assessment. So peace and blessings. Hope that helped. Take care. All my follow, like, share, subscribe. All my resources are here. Here, I'll play my let me play my commercial.
Pardon me. Before you watch the video, if you enjoy the content, go to anthonybwashington.com/resources. Download my books, courses, and free guides. Also, while you're there, schedule a call with me to get any of your business questions solved. Peace and blessings.
All right, guys, take care.